If you followed Bitcoin over the past several years, you'll see one thing. Over the long run, it mostly goes up. Sure, there are some corrections and resets, but on the whole, if you had purchased at almost any time before the end of 2020 and held, you'd still be in the money. So why does Bitcoin keep going up? And why are people who love Bitcoin so confident that it will continue to go up? That's what we'll attempt to answer in this video. So let's go. So what is Bitcoin? Bitcoin is simply computer code. It's ones and zeros. But Bitcoin is built on blockchain technology. And this underlying blockchain technology is what gives Bitcoin some value. So let's first talk about blockchain. What is a blockchain? Blockchain allows us to have a very important component of any money: scarcity. Before blockchain, digital scarcity was virtually impossible to ensure. Imagine you had a file on your computer, like a spreadsheet. By definition, that file is not scarce. You can make as many versions of that file as you want. You can email it to people, you can save it on a thumb drive, and you can click copy and paste over and over again. You can share or create as many versions of that file as you want. Now imagine instead of a spreadsheet that you had a file that was considered money. Under normal circumstances, you can make as many copies of this money as you want. That would be good for you because you could literally make as much money as you wanted. But if everyone else could do the same, the money would not be worth anything. So how did we solve this problem before blockchain? Historically, humans used precious metals like gold, governments printed money, and prosecuted counterfeiters, or you used trusted third parties to ensure digital scarcity. Before blockchain, you had to rely on these trusted third parties to keep an account or ledger of transactions. Now remember the word ledger because that will come up again. For example, if I wanted to pay you $100, I would tell the bank to take $100 from my account and put it into your account. My account balance would go down by $100 and your account balance will go up by $100. The bank keeps track of how much money I have and how much you have. This works most of the time, but there are a few problems with it. First, the bank could be dishonest. They could take money from one account to another, they could change balances at will, and we have to trust that the instruction is honest. And we also have to trust that the bank will stay solvent, which means they will have enough money if everyone decides to take out their money at once. We don't really own the money in our account. It's like an IOU that the bank gives to us. But if everyone tries to redeem their IOU at once, this can cause major problems for the bank. And of course, the actual supply of money could change. With recent government bailouts, governments across the world print money, often by just changing the numbers in some accounts. Over time, this can lead to inflation, meaning your money is worth less than what it was before. More money without a significant change in the number of goods and services available reduces purchasing power. So we've learned that traditional money requires trusted third parties, often isn't actually owned, and supply can change at any point. So how does blockchain fit into this? Let's imagine now that we choose to transact on the blockchain. In the bank example we just gave, the only copy of the ledger was held by the bank. They were ultimately the ones who had the final say in how much money each of us had in our account. With blockchain, you and I both keep copies of the ledger. When I send you 1 Bitcoin, I deduct 1 Bitcoin from my balance and I add it to your balance. But you and I are not the only ones with the copies of the ledger. Everyone else on the network has a copy of the ledger as well. That means you can't come back later and say that I didn't pay you, or I can't force you to return my money. Transactions on the network are immutable, meaning they can't be changed. All the computers on the network help make transactions permanent. In Bitcoin terms, these computers are called miners and full nodes. They all keep copies of the ledger and they constantly check in with each other to make sure the network stays current with all transactions. Every single Bitcoin transaction that has ever happened is recorded into this ledger, and every single Bitcoin transaction will continue to be recorded into the ledger. Since anyone can get a copy of this ledger, anyone can verify any past transactions. So Bitcoin is much different than gold, which you could just hold in your hand. Bitcoin is powerful because of the network of miners and nodes that operate to keep Bitcoin running. So why does Bitcoin keep going up? If you've wondered why Bitcoin seems to keep going up, you're not alone. Prices in markets are set by supply and demand. Here's an example of a supply and demand graph. You've probably covered this in Economics 101, but here's a quick refresher. The blue line represents supply, the red line represents demand, As demand increases, price tends to go up. As demand decreases, the price tends to go down. At any given point in time, markets are at supply and demand equilibrium for that exact moment. That means that in a moment, everyone who is willing to buy at a particular price has purchased, and everyone who is willing to sell at a particular price has already sold. This is price equilibrium. Common exchanges like Coinbase and Gemini are vehicles for people to buy and sell Bitcoin and help the price reach equilibrium. The price you see each second is the exact price equilibrium for that exchange in that exact second. Why the price goes up and sometimes down. Sometimes the Bitcoin price goes down because you forgot to smash the like button. Just kidding. But why does the price of Bitcoin tend to go up and down? In order to find the answer to that question, we need to look at the two inputs to this formula, the supply and the demand. First, let's look at supply. Bitcoin is unique because there will only ever be 21 million Bitcoin. No individual sets this limit, but it is set within the source code and agreed upon by all members of the network. The only way to get more than 21 million Bitcoins is for Bitcoin to cease to be Bitcoin. Bitcoins are mined at a relatively fixed rate. We won't unpack mining here, but if you're imagining some lemmings digging underground to find magical digital coins, that's not quite what we're talking about. Instead, mining farms are basically big supercomputers that solve mathematical problems. Once a problem is solved, they are given a Bitcoin as a reward. When Bitcoin first started, people could unlock massive amounts of Bitcoin quickly, around 100 Bitcoin per block. Since then, that number has halved every few years. This means today, there are far fewer Bitcoin being mined than there were in the 2000s. So you have a fixed supply of 21 million Bitcoin, a steadily decreasing flow of new Bitcoins, and people occasionally losing Bitcoins after storing them improperly. All this adds up to an asset whose supply isn't going to get bigger anytime soon. Now let's look at the demand side. All this talk of supply is important, but it means nothing if demand isn't factored into the equation as well. As Bitcoin becomes more popular, retail demand continues to grow. That means people are using apps like Robinhood, Coinbase, Square, and PayPal to buy more Bitcoin. And in 2020 and 2021, we began to see massive interest by institutional investors in Bitcoin. Hedge funds, pensions, insurance companies, publicly traded companies, and other major players have dumped hundreds of millions of dollars into Bitcoin. Plus, if you add in Bitcoin funds like the Grayscale Bitcoin Trust, you had a massive increase in demand across both the retail and institutional sectors. So what does this mean for Bitcoin's price? Obviously, no one knows for sure what Bitcoin will do in the future. But we already know what the Bitcoin supply looks like in the future. It's written into the code. And the trend is for continued increases in demand as more people acquire more Bitcoin. If the demand growth trend continues, we will likely see a continued increase in price over the long run. So what do you think? Will Bitcoin keep going up, or is it just a bubble waiting to pop? Tell us in the comments below, and please smash that like button and subscribe to our channel for more luxury and finance related content.